oil prices have been surging since the conflict between Israel and Iran escalated about 2 weeks ago, with both nations launching missile strikes on each other. Now, the United States entered the conflict yesterday, launching a series of attacks on Iran, and this escalation has caused energy prices to increase even further. So let's bring in here Vivek, Dhar, commodities analyst at the Commonwealth Bank. Vivek, thanks for your time. Look, markets and commodities traders are obviously awaiting to see Iran's response to America's attacks, but what are some of the likely outcomes here when it comes to the price of oil and Brent crude?
Yeah, sure. So look, in terms of how we're seeing the market, I think what's facing Iran is really two key decisions. Do they make a symbolic retaliation where they foreshadow an attack and basically they are looking for some level of de-escalation to take place? And there is some reports out there which are indicating that Iran was already informed of some of these attacks at nuclear sites, which would really lay the groundwork for such an outcome. Now, if that gets paired with an Israeli ceasefire, we're talking Brent back at $60 to $65 a barrel. And I think that's certainly one part of the market is arguing that's where the price will end up going. And this is why we've seen prices edge lower when it opened up today at above $80 a barrel. But then there's, of course, that tail risk, this small probability of a very high price outcome. And this is where if Iran chooses more of a substantial retaliation, and that's where potentially that Strait of Hormuz becomes a point of attack. Now, we don't believe that Iran is keen at all to blockade the Strait of Hormuz. But what our concern is that they may end up using disruption via what they've seen the Houthi rebels do in the Red Sea. Now, this has been something that has worked, and the blueprint is there, where you could very much impact tanker shipping through the Strait of Hormuz channel. And that is something that could potentially see oil spike at about $100 a barrel. And so this is something we're watching very, very closely. And just to put in context how successful Houthi rebels have been, that the level of traffic through the Red Sea is now 70% less than what it was in 2022-23, despite a truce between the Houthi rebels and the US and US Navy presence. So it's a very fine line in terms of what Iran has to do, but you can see the polarizing outcomes facing the market and why that $75 to $80 barrel range has been kept so far.
Yeah, the Strait of Hormuz. Just give our viewers a sense of how important that region is, not just for oil trade, but for gas trade as well.
Yeah, look, it is a major energy arterial. Like we're talking about 20% of global oil supply goes through that key waterway, about 20% of LNG trade as well. So if we see any blockage or any disruption to tanker traffic through the Strait of Hormuz, it can have significant impacts when we talk about energy shortfalls. And, when we talk about oil, I think everyone thinks about petrol prices. And certainly that's where there's a lot of concern with inflation and what impact can that have. And this is particularly going to be the case because initially policymakers will look through any rise in petrol prices. But if it stays high for long enough, it starts impacting second order, third order impacts where it's hard to capture how much it has impacted CPI. But gas is probably the vector where inflation can actually rise in a way that people don't expect. Because gas is used particularly in fertilizers, which is then going to creep up in terms of cost push for food products. But even more than that, like what we're seeing in international gas prices is that it's impacting, say, East Coast Australian gas prices, which are also impacting electricity prices. So the way that gas can impact Australia, for me, is actually quite more significant than how oil can. So it's very much important and an important part of the market that everyone is watching, just what happens with the Strait of Hormuz.
And then from Iran's perspective, I mean, isn't it in their best interest to continue selling oil and shipping it to customers overseas to bring in revenue? So you think from that point of view, they would want to keep the Strait open?
Yeah, look, I completely agree. I think that it's unlikely that they will do anything with the Strait of Hormuz because I think that would potentially see US retaliation come back hard. But I would say that if they ever go down that path, it's probably going to be more disruptions via drone attacks and missile attacks as opposed to a full blockade. Because as you said, then they could selectively target tankers, push up oil prices, but also get their tankers out to China. So I think that's the middle ground we're kind of thinking Iran will settle on if they go down this path, which we think is unlikely.
Vivek, Dhar, thanks for coming on the show.